What is up, everybody? Wednesday morning, welcome to today's edition, Daily Market Commentary. Hope everybody's having a great day. I know I'm getting this out a little bit later than usual, but giving you a couple of minutes to take a look at the market movements. If you're new to the channel, click the subscribe button, hit the notification bell so you get the alerts and the updates. I'm joined by an amazing superstar this morning. You may hear my baby cooing in the background. I'm playing Mr. Dad this morning, so nothing wrong with being dad, staying home, looking at the markets. So let's go ahead and dive in. Looking at the S&P this morning, we are sitting right below the all-time high. We had a potential breakout area, but didn't really give us a full basing for a good breakout. So right below the all-time high, I think you've got another setup for a strong breakout. On a little bit of a pullback in the 15-minute time period, we do have yesterday's area right here. Now, what's interesting about this area here from yesterday is that I think it's a little bit of a bear trap, and I think that we're going to see some sellers that get in and sell just below this area of support, the Globex low, and that actually becomes an area for a potential long entry. Now, it's not a phenomenal level in terms of structure, but we do like the fact that it's a bit of a trap. The other thing that I like is this area down here, which is what I affectionately refer to as a noisy cricket. This is the wick over wick on a 15-minute time period. So both of those levels I think are pretty good for long opportunities. We are down a little bit this morning, trading down about 1.5 points in front of that all-time high. NASDAQ as well, looking like we're coming up against a potential 15-minute supply area. And that 15-minute supply area is that noisy cricket that we talk about, where we have this little base drop. Now, knowing that our big picture trend is up and that we're basing in front of the level, it makes this noisy cricket a little bit less probable. And so a little bit less probability behind that noisy cricket level. Breakout trade from down here, we didn't truly get great basing in front of here. You may or may not have gotten in yesterday and taken it for a little run, as it did give us a little run higher. But as I'm looking at it now, I think we actually could get a breakout up above here, and in that case, that supply level up above me would be that much weaker. So I'm going to remove it at this point just because we are getting a little bit of basing. I think we could see price pop above here, and then it would probably cut through here fairly quickly. I don't know that this would hold very well. Now, that's sitting below the all-time high, and our all-time high in the NASDAQ would be this area right up in here. Looking over at crude oil, we talked about the fact that in crude oil we anticipated prices coming down in the near term. Yesterday, we identified this 15-minute level, or should I say Monday, we identified this 15-minute level, and price came into the zone and gave us a 6-candle reason to get the heck out before moving higher. So that should not have been a loss for you. If it was 1, 2, 3, 4, 5, 6, it was a very, very small one because if you follow the 6-candle rule, then you're going to be out. Now, certainly on the contract rollover, we've come down a bit, and I believe that those gaps do hold some volition, and so I will put a potential short at the gap fill area going forward. But other than that, I don't really have a whole lot for today as an opportunity for a short. If we get basing right through here, we could trade into that gap area on a bit of a breakout if we get basing. Because that does create a little absence of orders. I could certainly see us moving 20 or 30 ticks with 5 or 10 ticks worth of risk. And then last but certainly not least is gold. We did get a gold breakout yesterday in the overnight sessions, and so that gold breakout did occur. And then we got 6 candles later, we had basically gone nowhere or potentially been stopped out. It was just not moving. And gold is continuing to do what it does, which is frustrate the living crap out of me. And that's kind of what it's been doing. Gold's been popping and then not behaving properly. So at this point, I'm not going to trade gold. I'm going to hold off just a little bit. I feel like we're getting a little bit of, I don't want to call it manipulation in gold, but I feel like gold's being a bit wonky through and around levels where it should be working a little bit more frequently. So I'm going to hold off on gold a little bit. Occasionally, this is something that you have to do, is just not trade an asset for a little while. And I'm going to replace gold in my analysis over the next couple of weeks with the euro. And the euro is continuing our continual march lower. This was the level that we looked at on Sunday night. We talked about the fact that we could anticipate a bit of a breakdown from this area. and we certainly got a breakdown. So I don't know if anybody is still holding that area, but if you are, that is moving very nicely. And if you don't trade the Euro futures market, it is an interesting market that you can utilize and get you an opportunity. It's not just simply trading the currency pair, but it's also trading the currency future. And I like this little area here for a potential reversal on the hourly chart. So let's take a look at that one for today when we're evaluating. There's actually a couple of nice little levels in here. But when you have supply level on top of supply level on top of supply level and they're not getting retested, that makes it really, really hard to get in unless you took the breakout up here from Sunday night. So those are our major markets for today. I wanted to take a quick look at those. Quick idea for a stock of the day. Let's talk about a stock of the day. Stock of the day that I want to talk about today is Paychex. Now, Paychex is, I believe, a little bit overextended on the daily chart. I think that we've rallied up a little bit. We are a bit overextended, and I'm really using ADP as another reason to say that we're overextended, because ADP is the big brother of Paychex, right? So if you look at Paychex versus ADP, I would not be surprised to see a little bit of a pullback in Paychex. And if we do, that 120 area is a really nice area to get long. If you're an options trader, you might even take a bull put spread somewhere above that 120 region. Now, we could theoretically also get a breakout above where we are right through here. We could theoretically get a breakout above where we are. But that, I think, would be, probably not as likely. Now, if you look, my pre-market, I'm trading on a super wide bid-ask spread. And so, 116 by 127. So certainly not really telling us a whole heck of a lot at the moment. What it tells you is you probably shouldn't hold these things and trade it in the pre-market. So, but those are the levels that I'm looking at for today. Keep an eye on Paychex as a slightly longer term play. Pull back into 120, I think, because you have an area of resistance. Old resistance acts as new support. A pretty good opportunity for a turning trade. So, hope you guys have a great day. Until tomorrow, everybody, I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.